Hello and welcome to Finextra. I'm Emily Horler and I'm here with Christoph Rieche of Iwoca. And we're at Finextra's Next Gen Banking event at Level 39. Thank you for joining me.
Thanks for having me.
What does the future hold for fintech partnerships with banks?
The next 5 years will be incredibly exciting for the fintech and the banking world. The last 5 years, you've seen the fintech companies build up their proposition, get traction, and build a very solid platform. And the next 5 years, it will be more integrated into the banking system. So I think the banks will take this opportunity to work with the partners that make sense for their customer base to offer their customers a better service and ultimately help their own profitability increase again. So I think the next 5 years will be very, very exciting by seeing partnerships forging, and then the sort of traction that the fintech already has by a better product proposition flow where possible into the banking product range.
What's the current state of traditional lending to SMEs and how can technology impact this?
The state is still quite dire, really. If you look at the last 5-6 years, the eras of quantitative easing, lending to small businesses has contracted by 25-30%, despite quantitative easing. Policymakers wanted to flood the market with liquidity, and in particular sort of to Main Street, but it simply didn't happen. So the state is still pretty bad, and only recently we started not to contract anymore in SME lending. So the state is still quite bad, and I think the reason for that is that you have more and more small businesses that are smaller and smaller in size, which makes it harder for banks to understand what the risk is of every single business, and therefore doesn't allow them to provide them with credit where they really should. And technology can really tackle this, because technology can reduce the cost very significantly while making the data that you get from your customer at the same time more powerful. And that's exactly what happens at Iwoca. We could reduce the cost of underwriting by 90% and provide a more rigorous underwriting and provide credit where we really should help small businesses get financing to do great things with it.
So will consumer platforms replace banks?
That's a great question. I think there is a real chance that very, very large consumer platforms, just because of their reach and because technology can integrate financial services also into their product proposition, might take some chunk of the activities that banks do today. Of course, there are a number of hurdles that come with it as well. Banking activities are very regulated, so if you're a retailing platform, that's not necessarily your area of expertise. But give it 10 or 20 years, it's not unfeasible that someone like Facebook could offer some sort of financial services as part of their platform as well.
And what about Google? Is that going to be a bank in the future?
It's probably Jamie Dimon's worst nightmare, Google. Think about what Google did. They completely changed the way how we're living, how we're using the internet, how we're thinking, how we're searching for things to buy or to educate ourselves. They own probably 25% market share in email accounts, a completely different product to their main proposition. And they have recorded the entire world so that you can go on Google Maps and see every house or street pretty much in the world. So how difficult is it for Google to offer a current account proposition to the billions of customers that they have? So if they were to decide to offer financial services, I think there would be a real threat to the current incumbents.
Christoph, thank you very much.
Thank you very much.
And thank you for watching.